Morning, it's Chris from Solstice ATR as well as Axel. You can find us on the website, Instagram, Discord, as well. You can DM me on Discord as well as Twitter. Twitter, my handle is Chrissy Farah, as is. You can find me right there. The most important thing, we use this adaptive algorithm for side market, up market, as well as down market. Remember to smash the like button, share with your friend, let us know what you think, and give us your commentary. That would be helpful to see what you like to see on the videos and how to help you in 2025 and your goals. Let's go to the first slide. And what I want to say, Happy New Year to all in 2025. Say adios or adieu to 2024 and begin your 2025 with not being biased. Trade what the charts offer you for the next 5 years. Remember, we are landing. We have 6, 7, and 8, 9, and 10 coming in for 5-year outlook on the market, not being biased on the short term. We're going to look at the breadth of the market because it's been very volatile and negative in the last 3 weeks. That is very important. I had showed it in the prior video, and what I wanted to do on December 14th, I showed the breadth of the market was under 1,000 and it's negative, while the stock market in the S&P 500 or the New York Composite NYSE being positive and the market was grinding higher while the breadth was negative. This tells me that their sentiment in the overall market may be changing as there will be sector rotations. Let's go to the next slide. And what I wanted to show, this is from Ryan Dietrich. He's a CMT advisor that trades commodities. He took the all the presidents on the second term and showed what the outlook have been in the last 2 terms when the president was reelected. So we don't know what, the 45, he's now 47, Donald Trump coming in January, what would the outlook be? Remember, the Federal Reserve Board have to deal with inflation, interest rates, and the global market due to war, economy, consumer products, staples, as well as importing and exporting, as well as the tariff. Remember, Donald Trump is going to cause a little bit of reaction between the international market on taxes, what they owe the US in relationship to what they charge overseas on exporting products from the USA. So if I take a look at the Nasdaq 100 from 1991 till 2018, an average 2 year, I did not show the first and second year because there will be volatility, there will be negativity in the market. I showed it in the prior 2 weeks, prior 2 videos. You can go back and watch it to see that there is a drawdown in the overall market. But I wanted to show a 2, 3, 5, and 10 year and at medium average rate of return on the Nasdaq 100, which is the NDX, or you can use QQQ, or you can use /NQ, the Nasdaq 100, or the Micro E-mini, 47%, 85, 117, 5-year outlook 149. Let's go to the next slide. What I wanted to show here is the S&P 500 3-year historical rate of return. You can see the 2022 till 2023, the negativity from the January high till the October 10th of 2022 was the low. Then we had the January low and the March low on the Silicon Valley bankruptcy and the Federal Reserve Board stepping in to bail them out. That was the December high in 2023. That was the January low. We made a new high in S&P 500, but in the last 3 weeks we've been a little bit volatile with an engulfing candle. We tried to look up this week, but unfortunately we came back and sold off on Friday. So the outlook on a 2-year historical rate of return, medium is 32, 3 years 42, 4-year is 60, let's call it 62, and 5-year is 83. But you can see the average was 95 and 54 after 3 year. The most important thing, we use this for illustration use. It's not that we are saying this is what's going to happen. This is just educational use only. I put a drawdown in case the S&P 500 comes in beginning of the year till March. In case there is a drawdown, I put a 15% drawdown from that 6,099. Let's call it 6,100. 15% is 5,185. A 10% would be 5,490. You can take the 10% minus 610 from the 6,099 or 6,100. You'll get that number right here, where it would match the 50 simple moving average, which will catch up, which would be around the 5,500 area. Once if the market draw down, the 50 SMA will come up to catch up with that number coming back down to 10%. I'm not saying that we're gonna have a 10% decline. I'm just saying pay attention to the breadth of the market and the overall market, but the outlook in the 2 to 5 year outlook would be much better, looking for opportunities in the market in different sectors to understand. Most importantly, now check us out at Solstice. Give us your commentary, share with your friends. Let's go to the first slide that I had on the Nasdaq 100. What I wanted to show from the covered March 23rd of 2020 till the November 22nd of 2021, that was the high. I duplicated it by creating a box between this low and this high. I duplicated and moved it to the January, which gives us a 61.8%. And I marked that zigzag pattern and I left it on the charts because I said this is a little bit overextended. You can see the extension from the November high till the October low. I duplicated this Fibonacci to the upside to show you that we have made an 80% move back up. If I take the high and low from here to here, which is that box that I created, we can take a Fibonacci or a measured move. I can take this high here to this low here in March, and you can see the 150% matches the 78.2 Fib. This is what we call a measured move outlook in the future. When you look at a 3-year, 5-year outlook, if I take the 3-year outlook from this low to this high and I duplicate this to the high to low, you can see we touched the 80% on the prior year. But if I take the last year's measured move from here to here, this will show you that 80% retracement from the January low of 2023 till the December 2024 highs. So this year we're going to change these Fibonacci's. We're going to move to the January low to the December high because we still have 2 more days. If we end up taking out this one, that would be a higher high. If I do measure the distance between the January low of 2024 to the high, this is the measuring tool, and I will no longer use this Fibonacci, but I have it there for one reason and one reason in case the retracement comes back to the 61.8, which will act at 38.2 Fib on the move back down for an opportunity to buy, and that would be the 18 SMA for a bounce back up and coming back in. So I am paying attention on either side what the candle in the last 2 days before 2025 coming in and saying adios or hasta la vista or adieu to the 2024, and we enter into 2025 with no bias. Understand the risk, understand what you are doing, and remember to trade these moving averages. I will show you, this is the 18, this is the 50, this is the 116 simple moving average, the 200 simple moving average, and the 250 in baby blue or cyan. So 250, 200, 116, 50s in yellow, and the 18 is in green and red. These are the things I would watch whenever the 18 crosses the 50 to the upside. This is a bullish cross. When the 50 crosses the 18 and the 18 becomes lower, this is a bearish cross. So these are the trends I would watch. We are running up against the 50 SMA, holding us up. Coming back to the 18 is an opportunity, but if we fall through it, that would give you an opportunity to buy at the 50 simple moving average. This is for the Nasdaq. Let's now change it to the micro ES, and what I want to do is just use the S&P, and I want to show you the different sectors in the S&P, and I want to talk about the volume profile. you can see where we have built in the last 5 year value high and value low. You can see that there's a line here, and this is where most of the volume is. This is the value high, this is the value low, and the point of control is basically where most contracts on the S&P 500 are done or on a stock. So this is what I look for. We are, you can see here you have one distribution here, two distribution here, three distribution, and there are gaps in the annual chart coming to these what we call point of control. The big volume is usually they act as support and resistance. What I want to do, bring it down to an annual chart right now from the 5 year outlook. We're going to come into a daily. We're going to do 1 year annually from the January low of 2024 till the December high. You can see where the value area high is. We looked above, we tried to look above this year. We fell back inside the range. We bounced on the daily candle on Friday on the 50 simple moving average, but we are underneath the 18 simple moving average. In order to run, I need to see that this candle clears the 18 and clear the prior 2 days high and the candle that took us down last week on that big push down. So if not, and we fall through the 50, I'm looking for this gap here in the profile and where most of the contracts are. There's this one here and this one here, and that's the point of control. I can come back as far as the 57.24 to find support in the 116 SMA for another bounce. But if we do fall, we look for the 200 and the point of control, or the 250 catching up with the VPOC, which is point of control, where most volume happened this year in 2024 in the S&P 500, and vice versa. If you fall through it, you go to the value low. We use volume profile if we are trading above, we are trading below value low, or we are inside the range trading between the VPOCs and the point of control. You can ask a lot more with us. So on short term, it's up, midterm down, long term up. We are in compression. We can see that the mega Nasdaq 100, which is part of Apple, Amazon, Google, and Google, the Alphabet, Facebook, Microsoft, Netflix, and NVIDIA were negative on the overall sentiment. So what I'm paying attention to is what the market can offer us in relationship to the S&P different sectors, which are financial, discretionary, energy in the S&P, utilities, material, consumer products, technology, real estate, industrial, as well as healthcare and telecommunication. What I do, I look at the overall sectors in the S&P as well as the Nasdaq uh, 5 sectors to keep me in line with in relationship to small cap. Small cap is the canary in the coal mine that moves the market first. The small guys will move the Russell 2000 first. If there is opportunity, fear, and greed, it pushes the fear down in the market. It pushes the greed up in the market. So we pay attention to the canary in the coal mine, which is the Russell, in relationship to the 11 sectors in the S&P 500. So what I want to do, bring the S&P 500, which is the E-mini micro, and show you how to do the measured move. What we're going to do, go in here on an intraday, go to 20 days or 30 days, it doesn't matter. And what we do, we go to 6 hour or 4 hour chart. And what I want to show you is the overnight action. This is showing you the volume every day. So what we're going to do is turn that volume profile off, because it's telling you where the value high, where the value area lows are. But what I want to show is the overnight action in the European zone, as well as the trading hours, which is the New York Stock Exchange from 9:30 till 5 p.m. On the commodities, on the equities, it's usually till 4 p.m. Some equities trade 24 hours. Some commodities, such as the S&P, the Nasdaq, the Russell, they trade almost 24 hours. They get a little bit of reset around 5 p.m. on the close to readjust the numbers and continue for the following day between the Euro, Asia markets, and the US markets. So these are the overnight gaps. If I take them off, they will show the overnight gaps on the profile. So what I wanted to do is show you the last 5 day range. You can see this is Friday. You can see this is Friday's high. We don't take the Friday, we take the Monday low to high. This is the measuring tool that I'm going to do to show you the weekly range on the S&P 500. If I extend it to the left and just draw it to the left side, I'm going to go till December 1st so you guys can see it where the extensions are. You can see where that consolidation was before the breakout. Coming back, to that top, couldn't make it. Consider this as the head. This is the shoulder. This is another head. The backside of that large move down and bouncing back up didn't give us the opportunity to stay long on Thursday and Friday. Friday sold off 50%. If you take the high and low for the week, or you take the prior week high and low from here to here, you can see that the range on that big move down came to the retracement of the 200 SMA, bounced off, couldn't clear the backside. So that range on the 50, this is my weekly range, the extensions to the top, extensions to the bottom, and I'm paying attention to this area where the gap is on the profile on the S&P 500. And most important is we're going to trade what we see, not what we think on the short term, as well find opportunities on the long term to use these moving averages as well as the gaps. If I want to show you the overnight action, and I want to take the overnight action off, you can see in the equities, if I don't show it, and I'll take it in the futures and I don't show it as well, I want to show you how this will look like on the gaps. So that way you see there's a gap here on the contract change, the dump, the reset, and there's a gap between here and here, between the Thursday high and the Friday opening of the stock market. You can mark it with an oval or a box to show you where the gaps are, and that will give you a better understanding. We're going to make this in a little bit like a purplish color. We're going to extend it a couple of days out till end of the year so we can see where that extension is, or you can make it a little bit lighter. If you find that this color is too dark, you can go to a darker color so you can see where the levels are in the profile in relationship to those gaps. Because if I do a little bit more than 30 days, I want to go to a 90-day range. I want to show you guys how to look at these gaps. This is why I marked these gaps, to show you where they are. There's another one here. You can see it between here and here. I wanted to show it. If I extended, edit the property, usually all gaps are fillable. And if I do it for 2-3 days out, and you can see the extensions where they are in relation, usually like this gap here, when we went down, we filled a portion of it but didn't fill it coming back down. That gap here is a very important gap in the profile, because if I take this one from here to here and I extend it to the right side till December, let's do it till December 2024, let's do 12. 20, no, this is 12. Let's do it till 30. I want to show you that gap, that there is a portion of this gap that never filled. Coming back to this area is very important. The 200 SMA, filling this gap would be important, so it's no longer valid. So whenever there are gaps, we look for opportunities to go through them and buy back the gap, and vice versa here at the low. So we do have these ones already filled, and the ones on the top here are filled. There's one on the top, there's two at the lows I'm looking for, and this one here, you can see there was one where this week filled it and bounced off. So whenever there's gaps, I'm looking for these gaps in relationship to the profile as well as the overall market. I hope this video was helpful. Once again, you can check us out at Solstice ATR. Get in contact with us at the following numbers, the 949-414-8484 or the 626. Give us your smash button. Let us know what you think. Take care and happy 2025.